What is going on, guys? Good morning, good evening, wherever you are. Welcome into the live stream here with the Everyday Growth Advisors. It is once again a Friday, and we are about to break this market down just for you. Make sure you put in the tickers or any chart requests that you guys want me to do. I'll get to it right after the breakdown here on technicals. From the macro standpoint, we don't really have much that has changed so far, apart from just interest rate pricing in. Here's kind of a summary of where interest rates are likely to head to in the next couple of cycles. This is what the market's pricing in. So about 25 basis points for the next first February meeting, which is coming up just next week. Then on the March, we're looking at about a 20 basis point, then a 9 basis point, 1 basis point, and then it starts to get into the rate cuts after that. This is projected based on the CPI readings that will be forecasted out into the future. So, honestly, you know what it feels like to me? It feels like we are about to be trapped. That's what it feels like to me. I don't know what to tell you guys, but these past couple of days have definitely been a tough trading, cycle. Now, obviously, for the week, still pretty much heading a $23,000 profit week. Not the best, not the worst, but you know what? I'll take it, okay? It has been a pretty decent week. I mean, I'm not going to complain. It's just been a couple of things that I've been looking at that have really not been sitting well with me. First things first, the way that we've been getting up to the 4060, which obviously, granted, we've been talking about this on the newsletter, right? For those of you that have received the newsletter and you've been reading it, why did I close that? You understand that we've been looking at 4060 as a key level here. And as I was mentioning, as if bulls fail, blah, 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 blah. If failure for bulls to recapture 4060, then this will result in a downtrend in motion, but we will not be bullish until 4060 or 4000 are taken out subsequently with major catalysts. And so far, we just haven't seen that on the bullish plan just yet. Of course, we're a little bit early, so we'll see if that happens today. As I mentioned, in the previous newsletter, that this retest is going to take at least 1 to 2 weeks before or after FOMC. So playing the downside was the smart move in terms of risk to reward ratio structure. Now, I tend to be early to these things, so I always give it a little bit of a discount. But, you always have to take into the chance that, once we head up into here, We have hit all the way up into 4140 before rejecting. And this is that major trendline breakout where everyone's looking at it and they're thinking to themselves, oh my God, we bounced on the trendline, right? And we bought up right after that. So this must be a bullish reversal to the upside. Now, I'm not saying that that's not impossible. What I am saying is I think we should give this more time. And we should be more, skeptical about such moves. Because when the market presents you an opportunity like this, it's too good to be true, right? And when something's too good to be true, I tend to believe less in it, right? So, I definitely want to take this with a grain of salt, and I haven't been trading much as we head into the supply zone. For many of you that don't know, whenever we head into a supply zone of any kind, I start to trade less. And that's because things can go either way. It could go up bullish to 4150, or we could reject that 4,000 and straight come back down to the 3950 or 3940 level, right? And that's what kind of happened on Wednesday as the market decided that it wants to whipsaw back before moving to the upside. So in this juncture, the key level is going to be 4060. And we did mention that on the newsletter. We rejected perfectly yesterday at 4063. And it's not clear whether we'll get up into retest the 4100 or we'll retest the 4140, sorry. These two levels up here, which are the two previous highs, which were anomalies and breakouts, right? So today's session will be pretty telling in terms of where price action is going to hit to, or we just end up with a choppy session and then we just end up closing completely sideways. That could be on the table. In terms of NASDAQ, we're seeing pretty interesting price action here. Trendline bounce, pretty strong continuation. And ultimately, if we do get the breakout right here at around 12,110 or 113, then that sets up the retest of 12,227 and then ultimately 12,482, which is going to be the 61.8 retracement. So that's what we'll be watching on the NASDAQ and SPX this trading session that is to come. Now, the other one that I'm watching is IWM, which has been in a very nice reversal pattern so far. Downtrend, reversal, and then lower high. And then now we're putting in a higher low, and we need to see this higher high to kind of form this uptrend to the upside. So that's going to put up IWM to the upside only if we can break out of this and start testing the 195 and then $200 level after that, which will set up the obviously bigger rally on S&P 500, because remember that part of S&P 500 makes up the Russell 2000. Gold continues to stumble and kind of move sideways here, and the VIX is kind of just inching its way down into the $18 level, so volatility is kind of low. I was hoping volatility would come back, but not really. It has been just idling around. The bond market's just been saying, well, we don't know what you guys are doing, but we're just going to hang out here. And just kind of chilling around 106, been kind of chopping around this area. And I'm expecting the bond market to hopefully rally after FOMC if the Fed can reverse its course on interest rates. Adding to the pressure on the S&P 500 is the dollar index, which we've seen kind of stumble around this 101.70, 101.50 level or 101.60 level. And the break below that will send us further down into the 99 all the way to $99 level pretty much, right? So we'll be watching the dollar index very closely for that continuation. If not, then the dollar starts to buy up. That's going to cause additional pressure on equities to the downside, and that will set the cascading reversal. Semiconductors, the sector that I've been talking about for months on end, talking about how bullish it was and talking about how it's going to enter a boom cycle after it being in a bust cycle, has been really, really strong. We've been seeing prime brokers holdings increasing, which means that intermediaries that have been trading between hedge funds have been taking interest in this sector. So this will be one sector that we'll be watching in the next 1 to 2 weeks for further breakouts. If we get that break above 247, that's going to lead to a nice breakout structure on the upside. But right now, the risk reward ratio to the upside is not appealing to me, so therefore I will stay out till I see that. Financials, another sector that is on close watch next week as we head into FOMC. And FOMC is going to be happening on the 1st of February, so we'll be having that sometime next Wednesday. And the Fed's going to make its rate hike decision, likely to be 25 basis points. So if everything's priced in well, then we might see a continued rally on financials as we continue to consolidate here and break out. I've been talking about financials being bullish for a long time after the market bottomed out at the $30 level mark on XLF. Not to mention our prize dollar Tesla with a very nice earnings beat and good guidance. We're seeing that continue run up into 167 and the possibility of the rejection only at that level. So this will likely continue all the way up to 167 today. Another $5 give or take to the upside, which doesn't present a pretty decent risk to reward ratio, which I will not be playing. So if you want to play Tesla to the upside, make sure you're scalping, managing your risk, and keeping it tight. Nvidia, the golden child of semiconductors, has been pretty bullish, but then now seeing a little bit of receding. This thing has been exuberant for multiple sessions all the way through the start of 2023, as when I mentioned about semiconductors being bullish. This inverse head and shoulder has played out almost perfectly and now attempted to break out, but is showing signs of a possible rejection and a pullback. If this does indeed happen, then I'll be looking for a break below 186 or 185 for the confirmation and pullback to the downside. Otherwise, anywhere that it gets down all the way to 188 or 186 could be a bounce zone to the upside. And you don't really want to take aggressive shorts here until and unless you are very risky. Alibaba, also one of them with a pretty nice bottoming pattern that has reversed very, very strongly. So this will be something that I'm also watching on my radar. A break above 126 would be the upside here, and so I'll be watching that closely as well. Meta has been on a complete tear the past couple of sessions. Not sure if you've been watching this one. Looks like right now it's on a warpath all the way up back to 155. There's about a $9 upside on this thing. And we'll see, yesterday was up 4%. So looking for that bullish continuation momentum. Alrighty, let's do some of these ticker breakdowns and get straight into it. So, Tesla, let's go. Yeah, Tesla, let's go. Indeed, I just broke down Tesla. So, I mean, rejection level is 167.11. Be aware of that. Then the support after that. Let's have a look. Let us have a look. Hold on a second here. Let me just change this really quickly. Support is going to be around 161 or 162. So if it does break above this, then it gets up to 167. Fall back down 161, and then a breakdown back to 150. Possible retest of the trend line at some point, but we'll see if we actually get there. If it falls, it's going to fall back this way or sideways. So it'll probably come back to either one of these two levels. All right. CVS, did I miss the chance to accumulate shares the other day at 85? Let's have a look. Oh. There we go. CVS. Ooh. I mean, interesting. Why doesn't this have more price? Oh, okay, there we go. I was going to say, why doesn't this have more price action? Interesting. Okay, so on the weekly chart, looks like a big head and shoulders, doesn't it? Looks like big head and shoulders. This could be the right shoulder. I think that you're not too late to it. I think this is still a decent spot for you to accumulate shares. It's forming a weekly pin bar here. This looks like a good spot to enter this trade, to be honest. I would definitely take a nibble here. Let's also have a look at the daily exponential moving averages, or the weekly exponential moving averages for that matter. Oh yeah, dude, this is a great spot to add shares. It bounced nicely off the 200 EMA. Oh yeah, I would definitely take shares right here. Absolutely. This is a good spot. If you have deemed that the company is, has decent cash flows and it's a good buying opportunity, or it has a good balance sheet income statement, then yeah, absolutely. In fact, you know what? Let me go look at that real quick. Let's have a look at its financials very quickly. Revenue, look at its cost of goods sold. Let's pull out its free cash flow. Let's have a look really quickly. Oh, looks pretty good. Looks awesome. COGS obviously increasing with the revenue. Yo, this is a solid investment. I mean, obviously FCF's a little all over the place, but I mean, 8 billion FCF in September 2022. I wonder why investors are discounting this stock. Must be something. Yeah, I mean, I think it's a good spot to buy it, man, to be honest. For those of you that didn't know that TradingView could do this, surprise! You learned something new today. You learn something new every time you come to this live stream. So yeah, you can add all the key metrics here. I usually just add revenue and COGS, and you can get an immediate operating revenue. And FCF is really the thing that matters. So I add FCF right on the bottom there. You can make this all in the same scale too. You can right click here, merge all scales onto the same one, right, and then boom, it'll merge it. Looks good. I like it. Yeah, I would take shares here if you think that the company is undervalued. Of course, we could do that valuation really quickly too. So yeah, I would do it. I've been putting off switching to TradingView. Oh, you should switch to TradingView. It's great. I highly recommend it. And if you want to like get I think you can get a discount. Let me see. Let me see if I can put yeah, you can get a discount here. I'll put my referral code thingy there so you can use it if you intend to use TradingView. All right. Let me know if you guys have any other questions, any other charts, any other things that you want me to go through. Now, obviously, this is a good spot, Rich, to take an entry-level position, right? If it continues to fall further down, then you add as it goes further down, right? To get an average price. But it looks like, on the weekly chart, it looks like a decent spot to add some. Because it's consolidating at a higher low here. So I like this spot to add some shares. If it goes down further, you can add the next tranche at around 67, and then the last tranche at 52, if it really gets that undervalued. So that's what I would do, personally. Hey guys, there's about 20 of you here. Let's smash the like button. Can you guys help me with that? Can you guys subscribe and smash that like button real quick? If you can do that, I would truly appreciate it. Let's get to like at least 15 likes. Come on, let's do it. Let's do it. 15 likes. Let's do it. VWAGY, considering starting long position. VWAGY. Damn. Volkswagen. Oh, this is OTC. You're lucky I have OTC. I don't know much about this company, to be honest. Wow. Lots of manipulation here somewhere. What's the market cap? 79 billion. Not too bad. Personally, I would personally I avoid automobile industries for long-term investing, mainly because margin compression, super competitive environment, no competitive advantage. That's my main thing. Like I only invest in competitive advantage companies where they have a clear monopoly or a clear advantage over their peers. So I don't know much about this, but if you're looking just from a technical standpoint, sure, this looks like a decent spot to add some. If you already have a running position or you want to add, a starter position, it is at the 200 EMA, so I would add some here. This is a decent spot. But if you ask me from the valuation standpoint, I know nuts about this company, and that's just my 2 cents. I'll be honest where I am honest. Like things like other companies, I know their valuations and I know how the business is. I'll tell you honestly. But things that I don't know, I'm not going to profess to know and then give you false information. That's just not right. Okie dokie. Any other questions? Come on, 12 likes? We need 3 more likes. Come on, 3 more likes. We got this. 3 more likes is what we need. You guys can do it. I know you guys can do it. Okay, well, I would end the stream here because I want you guys to have a good weekend. Be prepared for the week ahead. These live streams are here exclusively for y'all to improve, so I hope that it's helpful. Guys, big announcement for the people that are here. Please, 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 please. Remember that 31st is the day that we're launching EGA version 3.0. For those of you that don't know what EGA version 3.0 is, we are launching one of the most comprehensive courses that I have ever put together to date. For those of you that don't know what it looks like, this is what it looks like. And this is our entire curriculum. It's called Growth Investing and Trading. And I'm going to plug it right now because, you know, why shouldn't I? You're going to learn about evaluation. Valuations are one of the major things. Like the FA module is perhaps the most comprehensive module on there. Technical analysis module is the biggest module on there. So if you have never learned things properly and you want to finally take a stab at learning something from somebody who actually knows and has a master's in finance, then this is the only course you're ever going to need. Okay. Of course, I'm going to add options trading in there. And you'll get market update webinars together with this course. You'll get an exclusive student Telegram discussion group where this is not the same as the free discussion group. This is going to be an exclusive one for students itself. Then you'll get a valuations Excel sheet, which is a DCF model calculation. You're going to get a trading journal along with it, right? By the end of this course, you're going to be a master of the stock market. That's for sure, okay? Trust me on that. Or you'll at least know more than you started with, that's for sure. So for those of you that are interested, we're going to launch in the next couple of days. I hope you're looking forward to it as much as I am. And yeah, I'll see you guys when we start launching. I think next week on Wednesday's live stream, I'll announce once again. Now, remember, guys, if you sign up through the Instagram, if you go to our link in bio, like right here, and you sign up through the early bird, right here, the early bird V3.0 sign up, this is going to give you 30% off promo code for the day that you sign up. I'm gonna remove this waitlist exactly in 2 days from now. So on the 29th, this waitlist is going to be gone. So if you want to get that 30% off promo code for the course and save 30% off on the course, which you should do, then you should probably sign up and go to this and get the waitlist right now. Okay. If you wait till 2 days later, I'm going to remove it, and then you won't get access to the 30% off. Then you'll have to pay full price. So up to you if you want to take the 30% off or not, but I'm giving you the opportunity to get a discount on the course right now. So just letting you know. Okie dokie. Well, have a great trading day, guys. I'll see you guys back on Monday for another trading session, live trading. And I'm going to get onto the Discord now to trade live with the team. So I'll see you guys soon. Take care. Peace out. Have a good weekend. Relax. Enjoy. If the market doesn't give you an opportunity today, please don't press it. Just take a break. You know what? Enjoy your long weekend and just come back on Monday because, you know what? Things are really choppy right now and it's not exactly the best environment. So I'll see you guys back on Monday and take care and bye-bye.